Hi, I'm Ernie Zor for Puritas Spring Software. This is the 8th in our FAQ Frequently Asked Question video series, and in this video I'll be discussing the 2017 tax reform legislation and how it affects the calculation of spousal support in Ohio. We're producing this video in January of 2018, and right now tax reform is a pretty hot topic. The spousal support statute, Ohio Revised Code 3105.18 subitem L, expressly lists tax consequences as one of the statutory considerations. It's not a discretionary consideration, it's mandatory. So compared to how the new legislation impacts child support, you'll find that the way it affects spousal support is much more direct. Let's see how that's true by running through a calculation under the old and new law, and we'll see how they differ. I've created a file which I'm going to open right now, if I can find it. I think I called it FAQ 8. There it is. I think it's the same one we used as an example in our CLE video, but I've taken out the child so our calculation can focus on spousal support without child support entering the picture. The other thing I'm going to do, if it hasn't been done already, is I'm going to freeze child support at 0 so we can take a bare bones look at the parties' respective finances. And I'm going to the Set Spousal Support. I'm going to go to the Spousal Support item. I'm going to click in there and then click on Override and change that amount to 0. You can tell it's an overridden amount because it appears in red. Anyway, in this scenario, the wife earns $30,501 from her employment, and the husband is self-employed and has net income of $70,916. Now, I'm going to go to the Income Taxes, Support, and Expenses form, the one we call ITSE form for short, and that allows us to see a summary of what's happening when we apply pre-2018 tax law. What we see is that the party's difference in income is about $40,000. Well, that's $70,000 minus $30,000. I'll scroll down a bit so you can see that husband's total taxes come to $10,335 and the wife's $4,856. So scrolling down even just a bit farther, we see that after taxes, the husband has income of $60,591 and the wife $25,645. The difference is roughly $35,000, and if we were trying to equalize their incomes, we might expect spousal support to be somewhere around $17,500, which is about one half of the $35,000 difference in their after-tax incomes. Now that's my starting point. So to move on from there, I'm going to go back to the Set Spousal Support screen, and I'm going to unfreeze or cancel the override on spousal support. And wow, that's pretty cool. It jumps right back up to what it was supposed to be, quite a bit different from the $17,500 we were expecting. And my first question actually is, well, why is that? And what we're going to do is we're going to take a look back at the ITSE form and see why that is. The income section is the same, with the exception that the $22,339 of spousal support is now being added to the wife's taxable income. Another difference is that the husband's taxes have been reduced. Remember, this is pre-2018 tax law, from $10,335, which it was before, to $4,728, and that's thanks to the adjustment to income he receives by making the spousal support payments. The wife's taxes, on the other hand, have increased from what they were before, $4,856. They've now increased to $8,917, and that's because the support she receives has been added to her taxable income. That means that the after-tax difference in their incomes is about $44,614, and a spousal support award order of half of that would be $22,339, and that brings their after-tax incomes into parity. I know what you're saying. You're thinking, whew, we've been throwing a lot of numbers around, but we're almost done. So let's do one more thing now. Let's apply 2018 tax changes and see what happens. And you'll like this. I'm going to do that so easily because all I have to do is click the 2018 button there at the top. Gives me a little notice. It says, we're going to use the 2018 figures now. Okay. On the ITSE form, essentially the main change is that spousal support has no tax consequences. I've got even a better idea. Let's go back. I want to put 2017 law back in effect, and I'll click the button to the 2000, which became now a 2017 button. I'll click that, and then I'm going to preview and print. I'm not going to actually print, but I'll preview the ITSE form. There it is. We'll just leave it like that for a second, and I'm going to go back to that button, 2008, and I'm going to change it back to 2018, and I'm going to print and preview that one. It's cool. Now, well, okay, here we go. Now what I'm going to do is I'm going to do something really cool. I'm going to use a cool Windows feature function that allows me to place these side by side. Bang. Yeah. See how easy that is? Works great. You have to admit it's a cool feature for making this kind of comparison. And the first thing you'll notice is that spousal support was reduced by about $5,000. That's one compelling reason to get the new spousal support calculator, isn't it? But where did this $5,000 reduction come from? Well, because under the Tax Reform Act, spousal support is neither taxable income or a deduction. So the income section of the form is much like the 2017 counterpart, with the notable exception that there are two new lines in the non-taxable section for spousal support. Now, looking down a little farther in the taxes and support section, we see that there was a reduction of $1,000 in total taxes. That is adding both parties' taxes together. And that went from $13,645 to $12,526. What you see happening is that the husband's tax liability increased from what it was in 2017 scenario, because he's not getting that big spousal support adjustment, and the wife's taxes went down because she's not experiencing the big tax increase in taxable income from receiving the spousal support payments. Well, as I was preparing this example, I was thinking, okay, well, if the government and the tax difference is $1,000, where's the rest of the remaining $4,000 of the $5,000 of support reduction coming from? I believe the answer is that the disparity in income between the parties is smaller under the new tax law because the husband is paying the taxes on the income from which the support payments are made, and the wife's tax burden is greatly decreased because she no longer has to pay taxes on spousal support received. Therefore, husband's after-tax income is a bit lower, and conversely, wife's is higher than it was before. I think the result is better from the standpoint that spousal support, having no withholding, created a significant tax burden on the recipient. Well, the list of things that changed under the new tax law is rather lengthy. The treatment of spousal support is no doubt the main one, but there are other factors that account for that $1,000 difference in total taxes. The tax rate schedules have changed. The standard deduction has increased. The child tax credit has been expanded to include a family tax credit, and the alternative minimum tax exemption amounts are permanently adjusted for inflation. These are just a few of the many changes. Also, just to confuse matters more, I've seen variations on how these changes are to be implemented, so I'm reasonably sure the spousal support calculator will continue to be updated throughout 2018 until the IRS publishes the last word. Just an example of the confusion is the issue of the personal exemption. There's a Forbes article floating around on the internet about how the phase-out has changed. Well, from my reading of the bill, that's kind of wrong because the personal exemption has actually been repealed. There's no phase out. It's gone. So again, I expect the IRS to give us some very specific instructions on how most of these issues are to be handled sometime before April 15th, 2018. I think that covers the main points, and at the same time keeps this video to our target length. And by the way, there's a YouTube FAQ, frequently asked question companion video about child support and the 2017 tax reform legislation. So if you haven't seen that one, go take a look at it. Now, as always, I've had a great time making this video for you, and I hope you found it worthwhile. Before I leave you, I'm going to mention that the new Puritas Springs book, The Best of Law Office Computing, is now available in paperback, and you can get the ebook at Amazon for only $9 and the paperback for only $12.99. It contains a ton of valuable law office technical information. It's written for users of all levels of expertise, so go ahead and get it. In the meantime, have a great day. Thanks for watching, and take care.